A year ago, Bitcoin's rise was the talk of the town. Then it started to plunge and plunge. And last December, one Bitcoin cost $19,000. Now they're trading at below $4,000. Digital currencies are facing an existential crisis, and only the most hardened risk traders are daring to touch them.
This is how some on Twitter have depicted what's happening behind the scenes during the ongoing Bitcoin crash. Although these images are not actually connected to Bitcoin, they nonetheless serve to illustrate how dramatic the mood is for some right now. Across the board, digital currencies are flailing. Bitcoin has lost 78% since the beginning of the year. Ripple has lost even more. And Ethereum and Bitcoin Cash have dropped more than 90% each. A year ago, Bitcoin was the talk of the town. People watched excitedly as the value skyrocketed to $20,000. Banks started working feverishly to build a digital currency infrastructure. But the plunge in value seems to have dashed hopes. Is it now game over for cryptocurrencies? Will they not be an accepted asset class after all? Some die-hard crypto analysts remain confident. They believe digital currencies will rise like phoenix from the ashes, as they've done many times before. Others say their value has always been zero, making them still overpriced.
So let's get the expert take now with our financial correspondent Uli Bartz at the Frankfurt Stock Exchange. I mean, Uli, Bitcoin's demise should not really come as a surprise. There were plenty of warnings, no?
Yes, I can still hear them. They're ringing in my ears, even as Bitcoin was rising and rising. I can remember in December 2017 being a member of a group that was talking with Bundesbank President Jens Weidmann, central bank head here in Germany. And he said, it's not a currency. It's risky. You have to know that you can lose. And he wasn't the only financial supervisor who warned. And there's a famous diatribe by Jamie Dimon, the CEO of JP Morgan, against Bitcoin, who chided his daughter for experimenting with it. And, you know, there were plenty of warnings because people said it's not a currency. There's no intrinsic value. There's no financial supervision. One shouldn't have been surprised with all these experts weighing in.
So plenty of warnings. Is Bitcoin all bad, though?
It's not all bad. I think it's good that there's been a debate on an anonymous, fast, independent of central banks currency, but especially the technology behind it, the blockchain. That's here to stay. That's something that was, I think, promoted by all the publicity on Bitcoin itself, and it has to be separated from the Bitcoin itself. And that's going to be a basis for the financial business in the future. It will revolutionize trading and payment systems. I'm pretty sure of that.
All right, Uli Bartz for us in Frankfurt. Thanks, Uli.